Study Section 5, Bank Reconciliation Statement. Introduction. In this study section, we are concerned with the reconciliation of the difference between the bank balance in the bank column of the business cash book and that in the bank statement sent by the bank. Objective. At the end of this lecture, take 2. At the end of this study section, you should be able to prepare adjusted cash book and prepare a bank reconciliation statement either by starting from the cash book balance or from bank statement balance. Pretest. 1. What is the relationship between bank reconciliation statement and the bank column of the cash book? 2. List and explain briefly the factors that cause disagreement between cash book and bank statement. Content. A. Nature of reconciliation. If two friends quarrel or fail to agree about some matter, the disagreement may temporarily end the friendship between them. When they become friends again, we say they have reconciled with one another. Reconciliation is therefore the resuming of friendly relations as a result, very often, of reasonable explanations. In business, we often have sets of figures which are apparently in disagreement with one another, but reasonable explanations for the difference will reconcile the two sets of figures and show that, in fact, both are right. B. Balance as per cash book and balance as per bank statement. In business, we keep our bank account in the cash book as part of the 3-column cash book. It is made up every day, and we enter in the account all checks received and take from the account all checks paid. We shall also have several contra entries every month, recording cash takings paid in or cash drawn out when required for office use. We therefore have in our cash book a bank balance as per cash book. The bank is also keeping a record of our bank account, and they too enter into our account every day what is paid in and what is drawn out. At interval, they send us a statement showing our bank balance as per bank statement. C. Relationship between bank reconciliation statement and cash book. The bank column of the cash book of a business organization should contain the same details as the records held by the bank, all things being equal. This is because the bank column of the cash book and bank statement show the same transactions on opposite sides. For example, we debit checks and cash paid into the bank account in the cash book, while bank will enter the same amount on the credit side of the bank statement. The treatment of items in both the cash book and bank statement may be summarized as follows. Description: receipt, bank column of cash book, debit, bank statement, credit. Description: payment, bank column of cash book, credit, bank statement, debit. Description: cash at bank, bank column of cash book, debit balance, bank statement, credit balance. Description: bank overdraft, bank column of cash book, credit balance, bank statement, debit balance. D. Why do the cash book figure and the bank's figure disagree? There are 3 main reasons why these figures often disagree. One party may lack knowledge of the actions being performed by the other. For example, bank may deduct charges that the business is not aware of. B. There is always an unavoidable delay between one party doing something and the other party knowing about it. For example, the bank will not be aware of a check drawn by the business until such a check is presented for payment. C. Errors often occur either in the cash book or in the bank statement. The idea of a bank reconciliation statement is to discover these three sorts of differences, put right anything that is wrong, and draw up a logical explanation of the remaining differences which are not wrong but are delayed from being right by the time lag. Specifically, the causes of differences between cash book and bank statement include 1. Payment in the cash book only. 2. Receipt in the cash book only. 3. Payment in the bank statement only. 4. Receipt in the bank statement only. Payment in the cash book only. This is usually the unpresented checks. These are checks already paid out by the business but yet to be presented for payment at the bank by the payees. The checks would have been credited to the cash book when they were issued. Receipt in the cash book only. This is usually the uncredited checks / lodgements. These are checks lodged into the bank account by the business but yet to appear as credit in the bank statement. A common reason for uncredited checks is the delay caused by the clearing system. Payments in the bank statement only. These are various items debited in the bank statement which are yet to be recorded in the firm's cash book. They include 1. Bank charges, commission on turnover, COT, and VAT. 2. Interest on loan and overdraft. 3. Standing order. These are regular payments made by the bank on the instruction of the business. 4. Dishonored checks. These are checks earlier credited by the bank but which were later dishonored by paying banker. Upon the dishonored, the checks are debited to the account of the firm by the bank. Receipt in the bank statement only. These are various items credited in the bank statement which are yet to be recorded in the firm's cash book. They include 1. Interest received on deposit and current accounts. 2. Dividend received. 3. Direct credit. These are amounts received directly into the bank account from debtors who had been instructed to pay directly into the firm's accounts. E. Procedures for preparing bank reconciliation statement. For you to reconcile the bank balance in your cash book with that of bank statement, the following steps may help. Step 1. Ensure that both the cash book and bank statement are written up to the same date, which should be the reconciliation date. Step 2. Update the cash book and obtain the adjusted cash book balance. To do this, you will post all payments in the bank statement only to the credit side of the cash book. Similarly, you will post all receipts in the bank statement only to the debit side of the cash book. Finally, you should correct all errors identified in the cash book. Step 3. Prepare the bank reconciliation statement. To do this, you can start from the adjusted cash book balance to obtain the balance as per bank statement format 1. Alternatively, you can also start with the balance as per bank statement to obtain the adjusted cash book balance format 2. The two formats for preparing bank reconciliation statement are as follows. Format 1. Starting with the adjusted cash book balance. Balance as per adjusted cash book. Add unpresented checks. Less uncredited checks. Add / deduct bank errors. Balance as per bank statement. Format 2. Starting with bank statement balance. Balance as per bank statement. Less unpresented checks. Add uncredited checks. Add / deduct bank errors. Balance as per adjusted cash book. Example: consider the following information from Ramsey's cash book and bank statement. Cash book, bank column only in brackets, 2009 in Naira. February 1, balance B/D, 22,500. February 10, solo, 5,075. February 17, borrow, 6,262. February 28, Crayford, 7,350, totaling 41,187. March 1, balance B/D, 29,907. On the right side, February 2, green, 4,760. February 14, Howard, 2,850. February 19, Whale, 3,670. February 28, balance C/D, 29,907, totaling 41,187. Bank statement, Ramsey's in account with First Bank Limited. Date: 2009. February 1. Details: balance brought forward. February 2. Details: green, debit 4,770. Balance 17,740. February 12. Details: solo, credit 5,075. Balance 22,815. February 16. Details: Howard, debit 2,850. Balance 19,965. February 16. Details: charges 525. Balance 19,440. February 17. Borrow, credit 6,262. Balance 25,702. February 28. Details: federal government bonds, credit 1,258. Balance 26,960. Explanatory notes. A careful look at these two accounts reveals the following. A. The balances do not agree. It is 29,907 Naira according to the cash book, but just 26,960 Naira according to the bank statement. B. C. Whale has not paid in check paid to him 3,670 on February 19th. He may be a sole trader who only bothers to go to the bank once in a week or once in 2 weeks. This is one example of time lag. D. Crayford's check, 7,350, received by February 28th, that is today, has been paid in by Ramsey but is not recorded on the bank statement. This is another kind of time lag. The bank will probably credit it tomorrow to the account of Ramsey. E. The bank has charged Ramsey 525 bank charges. Ramsey did not know about this deduction from his account, but now he is aware that he should clearly put it right by deducting it from his bank account. F. The bank has received some interest, 1,258, from the central bank for Ramsey. Ramsey has not been told about this increase in his funds, but now he knows that he should obviously enter it into his cash book. Solution. Adjusted cash book 2009. February 28. Balance B/D 29,907. Interest received 1,258. Total 31,165. March 1. Balance B/D 30,640. The right side. February 28. Bank charges 525. Balance C/D 30,640. Total 31,165. Bank reconciliation statement, format 1. As at February 28th. Balance as per adjusted cash book 30,640. Add unpresented check. Will 3,670. Total 34,310. Deduct uncredited check Crayford 7,350. Balance as per bank statement 26,960. Bank reconciliation statement format 2 as at February 28. Balance as per bank statement 26,960. Add uncredited check Crayford 7,350. Total 34,310. Deduct unpresented check Will 3,670. Balance as per adjusted cash book 30,640. Summary. The bank column of the cash book of a business organization should contain the same details as the records held by the bank because the bank column of the cash book and bank statement show the same transactions on opposite sides. The causes of differences between cash book and bank statement include payment in the cash book only unpresented checks, receipts in the cash book only uncredited checks, payment in the bank statement only bank charges, standing order, etc., and receipt in the bank statement only dividend received, direct credit, etc. Before preparing a reconciliation statement, you should update this cash book and obtain the adjusted cash book balance by posting all payments in the bank statement only to the credit side of the cash book and posting all receipts in the bank statement only to the debit side of the cash book. This is the end of Studies Section 5. Thanks for listening.